Hey everyone, Mike here with Financeable. Welcome back to our interview question review series. Today we're going to take a look at how long out into the future you project your stage 1 DCF cash flows. This is a common question in interviews, as always. We have a lot more of these coming. Please do subscribe to our channel and let's hop in here. All right, let's do a quick recap here first. So stage 1 and stage 2 are the two components of a traditional DCF. With stage 1, we're making explicit projections out into the future. And what we're trying to do is model the business until it hits a steady state, at which point we make simplifying assumptions for everything beyond that period of time. And that's where we have our stage 2, or our terminal value, the value beyond stage 1. So that's stage 1 and stage 2. And as we have with other questions, we're going to use the industry or company life cycle to frame the discussion around how long we project out for our stage 1 in particular. So quick refresher here. So this life cycle expresses how companies and industries typically grow. So companies and industries start small, they grow dramatically, they tend to mature, the growth peters out, and then they kind of carry on at that state out into the future. It's a bit of a simplification, but we're going to use that to kind of frame how companies grow and really in the context of a DCF. Now, with a DCF, what we're really doing, let's start with stage 2 actually, we'll start at the end of this, is we're trying to make a projection for a mature business out to infinity, out into forever beyond a particular point. And that's our stage 2. And what we really need to project out from this point to make simplifying assumptions is steady state growth. And what we mean by that is typically something around GDP. So we're looking for a steady state level of growth around GDP to project out into the future for our stage 2. So the goal of stage 1 in light of that is to get the business to that steady state. So stage 1 tilt this a little bit. Stage 1 is our explicit projection period where we're trying to get to that steady level of growth out into the future, and then again we carry that steady state growth out into infinity. Now, with that said, I'm going to talk about the standard answer for this question, which is you project your stage 1 here for 5 to 10 years. And that's usually the starting point for answering this question. So if someone says, for how long do I project out my stage 1, the standard answer you'll find in most interview guides is 5 to 10 years. And I would actually start with that answer. But it almost misses the point of stage 1. And if I were interviewing someone and pushing them further, I'd say, okay, well, how do we know when we stop? And the real answer here is not 5 to 10 years, but it's when we hit maturity. So for example, if we had a very mature business, we might only model out 2 or 3 years and then carry that out into the future, out into infinity. If we have an early stage business that has very high growth, it's probably not going to get to that stabilized steady state growth of, call it GDP-ish growth, for a long time. So we'd have to project out until they get there. That might be 10 or 15 years. So really, the answer to this question is we project out until the business hits maturity, and that's really dependent on the type of business that we're modeling. If it's an early stage business, we project out for longer. If it's a later stage business that's already pretty mature, we might only project out for a few years and then carry that forward. So that's the answer to the question. Hopefully this clarifies the number of years or the time for which we project out our stage 1 in a DCF. Please stay tuned. We have a lot of questions coming soon and hope to talk to you all shortly.